believe the business will come back, and I'm very much hopeful.
We are not trading Ukrainian territories, not a single inch.
If Putin is not stopped in Ukraine, there would be terrible implications for European and global security.
An aerial bomb of a maternity hospital is the conclusive evidence that what is happening is a genocide of Ukrainians.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Welcome to Bloomberg Surveillance Early Edition, everyone. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Ukrainian officials say a Russian airstrike has hit a children's hospital in Mariupol. President Zelensky calls on all European nations to strengthen their sanctions. High-profile talks in Turkey. Ukrainian and Russian officials, ministers, foreign ministers meet to discuss a possible ceasefire, and the ECB holds its first meeting since the start of the war in Ukraine. Officials weigh the impact of the conflict on the economy as well as surging inflation. So let's check in on the markets. Now, we were expecting actually a higher start, especially after the boost that a lot of the equity markets got yesterday. Not so. European stock markets down some 0.9%. The focus seems to be from investors about the fear of inflation. It's also very clear that we've seen a disruption overall on the markets. I'm looking at a couple of commodities on my screen, which you can also see here. There was a reversal from the UAE yesterday. First of all, saying OPEC Plus, they thought should put more barrels of oil on the market, and then retracting or certainly tempering that on Twitter. So we're not sure exactly what the position of the UAE is, whether they're comfortable in being the lone wolf in that pack, trying to say that they need to do more. 113.80 is where we are. But all eyes, of course, on the ECB and what it means, for example, for euro and what we're seeing for euro dollar. Now, if you look at the limited power of the European Central Bank, what it can do, for example, for standing prices, the only thing they could do is not only rely on fiscal stimulus, but of course, what they can do is trying to temper the euro's slide. Commodity markets really witnessing some of the wilder swings over this week, and market sentiment perked up yesterday. Today, less so, as they try to figure out what the US CPI number will be, and of course, what it means coming from the ECB. Also, the balance sheet of the banks. This is something that we can't forget because, of course, they're in charge of that. The DAX, 1.5% lower, similar losses for the FTSE MIB in Italy and the CAC 40. Now, a maternity ward and a children's ward in the southern Ukrainian city of Mariupol have been bombed. That's according to Ukrainian officials. They say a Russian airstrike is responsible for the attack. President Zelensky has called the bombing a war crime.
An aerial bomb on a maternity hospital is the conclusive evidence that what is happening is a genocide of Ukrainians. Europeans, you won't be able to say that you didn't see what happened to Ukrainians in Mariupol. You saw, you know. Consequently, you must strengthen sanctions against Russia so that it never has the chance to continue this genocide. You need to pressure Russia so that it sits at the negotiating table and ends this barbarous war.
Now, this morning, Turkey is hosting a meeting with the Ukrainian foreign minister and his Russian counterpart. The two sides will try to negotiate a ceasefire in the highest profile meeting between the nations since the start of the conflict. Joining us now is Tom McKenzie at the Polish-Ukrainian border and Bloomberg's international government editor, Ross Matheson. So, Ross, talks underway in Turkey, of course, between the Russian and Ukrainian foreign ministers. Do we know if both sides are ready for a diplomatic solution?
Well, certainly both sides say they're willing to talk, but there's a huge gulf between their demands for what each side would accept in order to de-escalate this conflict. Of course, Ukraine has gone into this conversation this morning saying there are three things that they want, that they'll insist upon. One is a ceasefire, a full ceasefire, which so far has failed to hold even in limited fashion for a few hours to enable humanitarian corridors. Secondly, they want Russian troops completely out of Ukraine, to pull out entirely. That's also on the table. And then they want security guarantees, of course, from the West to protect them in that scenario. You can imagine a lot of the things that Ukraine will put on the table today, Russia will say is simply not feasible. In turn, Russia is demanding things that Ukraine won't agree to, including the demilitarization of the country and a guarantee that it won't move closer to Europe. So we've got expectations pretty low for this meeting, even though it is the highest level one so far. The question is, what does it pave the way toward? Does it pave the way toward further conversations, negotiations around what could be a proper ceasefire? And eventually, does it pave the way potentially for a meeting between their leaders, which is what the Ukrainian president says is needed to end this once and for all?
Rosen, does that depend on whether the war is going Putin's way or not? It's unclear whether if he feels like he's losing, he's hardening, or the other way around.
Well, certainly so far, the Ukrainian president has called for weeks and weeks, even before the war began, to meet and talk directly with Vladimir Putin. He said the Russian president would not take his call, was not willing to speak to him, and they never had a chance to meet. You can imagine if the war is bogged down, really, the military and the Russia side are struggling on the ground. Is that the moment that Vladimir Putin wants to be sitting down and talking with the Ukrainian president directly? Does it look like perhaps he's then climbing down or losing face or going into that conversation on the back foot? Potentially. So is there a great motivation for him to meet face-to-face at the moment? Potentially not, at least until the situation as he would see it might be more advantageous for him in terms of the actual fighting.
Yeah, Ross, thank you. And Tom, what's the latest on aid spending for Ukraine? You're at the border between Ukraine and Poland.
Yeah, Francine, I mean, I'll talk about what's happening right here on the ground. One of just many, of course, border crossings. This is Medica on the border, of course, between Poland and Ukraine. Behind me, you can see the checkpoint for the lorries and cars that are going across into Ukraine. A lot of that will be with supplies for the refugees that are lining up to cross over the border. There are also, I should say, men who are crossing over, Ukrainians crossing over to join the fight in Ukraine. We've met a couple of those just in the last couple of days. On the other side, there's the pedestrian crossing, and we are seeing this morning, just in the last few hours, hundreds of refugees joining and crossing this border. And again, the majority are women, children, and the elderly. The Polish military is here, the Polish police are here, and volunteers from across Europe. It's very rudimentary, it's very ad hoc. There are tents, there's food, and there's some clothing, but there's freezing temperatures here. The conditions are very challenging indeed for people who have travelled 2 or 3 days to get here, and then the logistics of moving on. The uncertainty for these people is profound. At the top level, we are seeing the funding starting to come through, and we saw that certainly from the United States, the House of Representatives, Francine, signing off on about $13.5 billion of aid, and a lot of that will go towards the refugees and humanitarian effort here in Eastern Europe.
Thank you both for joining us. Bloomberg's Tom McKenzie, of course, on the ground for us, and Ross Matheson, who's in charge of all of our government reporting now. To look at the markets, to look at what this means for ECB, what it means for inflation forecast, and the possibility of stagflation, we're joined by John Bilton, head of global multi-asset strategy at JP Morgan Asset Management. John, thanks so much for joining us. I have like 1,000,001 questions, because it's true that over the last 13 days, not only have our lives really, been glued to our screens and trying to watch the situation on the ground, but if you're in the markets or if you're in business, your forecasts have all gone out the window.
Well, I think what we have to do is separate the headline risk, and some of the horrendous things we're seeing going on across our screens, of course, are driving sentiment in real time. But at the same time, what we've got to think through is, what does this mean for the growth function? What does it mean for inflation? What does it mean for the policy reaction function? And yes, it's very difficult not to look at what is turning out to be a significant price shock across a wide range of commodities, not translating through to a little bit of a challenge for consumers. But it's uneven across different regions.
A little bit of a challenge? Or if you look at some of the prices that we've seen in diesel and gas prices in oil, I mean, if they stay at these levels, this is not a little bit of a challenge. This is inflation up 10%.
Well, let's put this into context. We took a look at our numbers. We took a look at our economic numbers. And yeah, we've cut our numbers for our European growth expectations significantly.
How much?
We're down by about 3%. So what was a big uplift following the easing of Omicron has now become a couple of quarters of flat growth. So we are seeing Europe under some pressure. But if we look at the global picture, there's much more translation there's much less translation, I'm sorry. So we've taken our numbers down, but only by a couple of tenths. There is much more resilience in consumer balance sheets coming into this crisis than we've seen previously when we've been looking at a contraction. So we do think that balance sheets are strong and can weather rather a lot of this price increase.
I mean, we have a great earnings chart, which I'm going to get to in a second. But if you look at earnings, are they not going to have to downgrade? Again, the second round effects and the third round effects, we're still trying to work through.
Well, this is the point, and this is why we need to look beyond the headlines, and we need to think about what it does to growth. Earnings, absolutely. We're seeing cost pressure going up. Normally, margins are pro-cyclical. You get nominal growth, it lifts revenues and costs. This time, we've got a growth shock, we've got a sentiment shock hitting revenues, and we've got costs going up across the board. It's really acute for industrials, it's acute for Europe, less so for the US.
Okay, John, we'll talk a lot more about that. That's one of my favorite charts, actually, looking at some of the earnings forecasts and what this means going forward. John Bilton from JP Morgan stays with us. Also, Amazon. This was one of the most significant corporate news that we saw and that we've seen actually in the last 2 months, a bit buried in the news because of everything that's going on with inflation expectations. But Amazon yesterday announcing some pretty big moves, and you can see the stock split and buyback plan impacting, of course, the share price just mechanically or technically. Now Amazon getting some 6.8%. Coming up, we continue to check on the markets and the fallout from Russia's invasion of Ukraine with JP Morgan's John Bilton. Also, Bloomberg's Lynn Thomason joins us. This is Bloomberg.
This chip shortage is going to last longer than many people believe, likely straight through this year, and I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
A lot's happening on Wall Street.
It's the basic law of economics.
That is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
For your business audience and watching Bloomberg, they should know that there is no successful investment in Russia or engagement with Russia as long as Vladimir Putin is in charge of it.
Well, that was former U.S. Ambassador to NATO, Kurt Volker, warning the business community about the dangers of investing in Putin's Russia. Now, we're also getting some breaking news out of Roman Abramovich, one of the oligarchs here based in the UK. The UK government is now saying that the owner of the Chelsea Football Club has his assets frozen. Now, what this means, and we've heard about 20 bids to try and buy Chelsea from various people, various billionaires really across the world, it's unclear. He had said about 10 days ago that he was putting Chelsea Football Club in a trust. This was not 100% confirmed, and we don't know whether it's rock solid. So we're unclear at the moment if these newly sanctioned or new sanctions by the UK include, of course, the football club of Chelsea, Chelsea FC. I know a lot of fans, but also a lot of investors will want to try and get to the bottom of that. The other person that has been targeting in these extra sanctions is Mr. Oleg Deripaska, who had been sanctioned in the past by the US. So again, unclear how much real estate, how many things Mr. Deripaska has here in the UK, but certainly Mr. Abramovich, Roman Abramovich, the owner of Chelsea Football Club, is what we're really trying to get to the bottom of, what it means for his assets and what it means for the sale of the club. So let's get back to John Bilton from JP Morgan. John, I want to talk about inflation. I don't know whether we'll see many more sanctions, and again, whether you model this. We heard from the U.S. House of Representatives in the U.S. that both sides want more punishment for Russia. We hear now the U.K. Freezing the assets of Mr. Abramovich. How far can this go?
Well, I think we've got to look at what we can model economically. This is a time of huge uncertainty, and trying to model off of the volatility of headlines and responses to those headlines, I think, is something that's difficult to do. What we can look at is what's the effect on growth, what's the effect on consumer, what's the effect on earnings. And that's exactly what the policymakers want to do.
Can you model energy prices, given the wild gyrations that we've seen?
At the moment, what we can do is we have some understanding of where supply could come from. This is one of the reasons markets have been very mobile. You had some commentary from OPEC since rode back. There's the question as to whether we get a shale response. Yeah. So we know where the oil is. But ultimately, what we have to follow is whether those taps are going to be unleashed.
How difficult is it to model, China's response into all of this? Because this could be the real game changer if they buy Russian oil, if they start being much more tricky and peddling misinformation.
Again, there's a lot of what ifs in this. And what we're looking for is, can we come down to understanding how has this affected trend growth? And what we can say is that if we look at it across Europe, if we look at it across the US, trend growth, potential growth, is roughly where it was. We have the same productivity and people within those economies. What we don't have at the same time is the surety on cyclicality. That's one of the reasons why we've taken our European numbers down, to project a couple of relatively flat quarters of growth. And to be clear, that is a massive cut, the biggest that I've seen us do outside of the coronavirus crisis. So this is a serious issue for European growth. But crucially, as we move more towards the medium term, what we have to think about is the response in terms of inflation, how that affects earnings. And it will look worse for industrial companies, in our view, than necessarily it will for perhaps financial companies. So there already seems to be some dislocations creeping through the market that we have to think about in earnings terms.
So, John, do you just sell, for example, the companies in Carlsberg was a case in point today saying, look, we can't guide forward just because of our exposure to Russia. I mean, those are companies that we pretty much knew who they were. Do you just stay away from those and kind of work on the rest?
Well, I think, again, I don't get into the level of individual securities, but certainly at the top level, what we can say is, if you look at the banks within the Eurozone, in the immediate aftermath of the crisis, of this conflict, they sold off faster than they have at any time in any crisis over the last 25 years. But the banks themselves have already well discounted not only a recession, but also some of the exposures. We think that the balance sheets are solid. So this is a sector which has probably gone too far. Industrial firms, for instance, instead, will face persistent cost pressures. So if we look further out, what we have to recalibrate for is not today's headlines, but what some of the lingering impacts of costs and margins are going to be.
So you just buy US tech?
Well, this is a world where we've got real interest rates now going back down to where they were at the beginning of the year. And if you think back to pre-crisis, during January, a lot of the sell-off in tech came at the same time we saw real interest rates moving upwards. Now, the Fed are still probably going to raise rates, but with inflation picking up, those real rates are back down. And that starts to sort of throw the cards in the air a little bit. Tech has derated a long way. It's a good earner. It's a decent cash flow area. So it's something that's definitely worth looking at.
John, something that would make the ECB's life a lot easier is if we have some kind of stimulus package from EU leaders. I don't know whether you see or foresee the chance of some kind of big coordinated package like we saw at the beginning of COVID when we didn't really know what we dealt with. And does that change your view on growth?
Okay, let's separate a couple of things out. What we got with COVID was we got the Fed, the ECB, Bank of England, you name it, the whole list of central banks creating massive monetary stimulus, and that changed the game. In this particular time, we don't have that option. This will not be solved by a massive monetary package. But make no mistake, the fiscal response from Europe so far has been significant. Think about the decision that they could issue joint bonds. That wasn't even considered during the Eurozone crisis. This is a much more joined up and fiscally coordinated Europe than I think we've ever seen.
John, thanks so much. John Bilton, they're head of global multi-asset strategy at JP Morgan Asset Management. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gearns. Hi, Leanne.
Hi, Francine. The US House has passed a long-delayed $1.5 trillion spending bill that funds the US government for the rest of the fiscal year. The bill will also provide more than $13 billion to respond to Russia's invasion of Ukraine. The late-night vote followed a day of political drama that saw emergency coronavirus funding removed from the measure. Now, Ukraine says it's open to discussing Russia's demand of neutrality as long as it's given security guarantees, although it won't surrender any territory to Moscow. In an interview with Bloomberg, a top foreign policy aide to President Volodymyr Zelensky laid out Ukraine's preconditions for talks with an immediate ceasefire and the withdrawal of Russian troops, the very top priority.
If you ask me whether there is a diplomatic solution, surely we're ready for the diplomatic solution. There were 3 rounds of negotiations already on the level of delegation. Tomorrow, our Minister of Foreign Affairs will meet together with the Minister of Foreign Affairs of Turkey, with Foreign Minister Lavrov. But very important that my president is ready to have the direct negotiations with President Putin.
Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Thank you so much, Leanne. Huge news from the UK sanctioning Roman Abramovich, but also Oleg Deripaska. Now, the UK government announced, of course, that Roman Abramovich's assets have been frozen. That prohibits a transaction with these UK individuals and businesses. It also will enforce a travel ban, and transport sanctions have been imposed. Now, what we need to understand is what this means for sales of Chelsea Football Club. He said just last week that that would be for sale. Some of the other individuals that have been sanctioned: Oleg Deripaska, who has stakes in N Plus Group, Igor Sechin, the chief executive of Rosneft, and Andrei Kostin, the chairman of VTB Bank. Now, what could be linked, or what also is something that we need to keep an eye on. Unclear whether this is a direct link of N Plus because Oleg Deripaska has stakes in that, but aluminium is actually extending gains on the LME, gaining now as much as 5.8%. We'll have plenty more, of course, on these sanctions and repercussion on metals. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Command the ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's take a look at stocks on the move with our Danny Berger. Hi, Danny.
Hi, Francine. Well, stocks struggling to have any follow through from yesterday's bounce. The best performing sector yesterday, autos, is the worst performer today. Yesterday, it posted 9.5% gain, now down almost by 3%. Also, some warning for corporates. Carlsberg removing their 2022 guidance over Russia. Credit Suisse warning about the impact to their business due to the war as well, Francine.
Yeah, thank you so much, Danny Berger. Also, the UK just minutes ago sanctioning Roman Abramovich, sanctioning Oleg Deripaska. That's sending also aluminium soaring. And what is at stake is the fate of Chelsea Football Club as well. We'll have plenty more on that. This is Bloomberg.